Hello everyone, I am Siva Sarkar. Last three digit of my roll number is 108. Today my presentation topic is monetary policy statements for July to December 2025. Let's move to the presentation. Introduction. Monetary policy is a key tool for managing inflation, growth, and financial stability. Balance Bank issues biannual monetary policy statements (MPS). Half one fiscal year 2026 MPS announced amid high inflation, depreciating exchange rate, banking sector challenges, external sector pressures. Then we move to the next slide. Objectives of half one of fiscal year 2026 monetary policy: contain inflation within 6.5% target, stabilize exchange rates through flexible regime, support GDP growth rate target of 5.5%, restore confidence in banking sector, rebuild foreign exchange reserves, balance between price stability and growth. Then we move to the next slide. Economic context. Inflation peaked at 11.66% in July 2024 and 8.48% in June 2025. GDP growth for fiscal year 2025 is 3.97%, that is slowest in years. Then external sectors, remittances $30.33 billion, that is 26.8% positive. Then exports grew 8.6%, mostly RMG. BOP surplus $3.29 billion, reserves recovered to $26.7 billion. Then we move to the next slide. Key policy announcements. Repo rate is 10%. That's unchanged until inflation less than 7%. SLF rate 11.5%. SDF rate 8%. Fully flexible market-based exchange rate regime. May 2025. Reference exchange rate published twice daily. Private sector credit growth target is 12.3%. Then we move to the next slide. Significant changes from previous policy. Here we differentiate two fiscal policies. Previous fiscal policy, twice half of fiscal year 2025, and current policy, half one of fiscal year 2026. If you look at the half one of fiscal year 2025, managed exchange rate, repo rate is 9.5%. The lending rate caps focused on growth, limited market tools. And if you look at the half one of fiscal year 2026, fully flexible exchange rate, repo rate is 10%, market-driven lending rates, focus on inflation control, wider OMOs or open market operations, and rate corridor. Then we move to the next slide. Tools used by Bangladesh Bank. Bangladesh Bank used usually two tools, quantitative tools and qualitative tools. If you look at the quantitative tools, we can see repo and reverse repo operations, cash reserve ratio and statutory liquidity ratio, open market operations, exchange rate interventions. Then if you look at the quantitative tools, we can see credit flow guidelines to priority sectors, macroprudential regulations, moral suasion with banks. Then we move to the next slide. Expected outcomes. Inflation to fall between 7% by December 2025. GDP growth projected at 5.5%. Taka stabilization via market-driven exchange rate. Improved liquidity and foreign reserves. Stronger confidence in banking systems. Then we move to the next slide. Challenges ahead. Persistently high non-performing loans, NPLs. Sluggish private investment, external risks, that is US tariff hikes affecting exports, geopolitical tensions impacting remittances, then political uncertainty around elections. Then we move to the next slide. Suggested policy reforms. Inflation targeting, move to formal inflation targeting regime. Banking sector discipline, stronger action on NPLs, non-performing loans. Exchange rate, gradual move to the fully market determined rate, improve monetary transmission, strengthen interbank and bond markets, digital and green finance, promote cashless payments and sustainable financing. Then we move to the next slide, and it's the last slide of this presentation. Half one of fiscal year 2026, MPS focuses on stability and inflation control. success depends on effective exchange rate management, control of non-performing loans, coordination of monetary and fiscal policies. With reforms, Bangladesh can achieve price stability and sustainable growth. Then we move to the next slide. There's references. To make this presentation slide, we use some resources. That is Bangladesh Bank Monetary Policy Statement, half one of fiscal year 2026, IMF World Economic Outlook, April 2025, Asian Development Bank reports, newspaper reports, and academic articles. Thank you, everyone, for hearing this presentation. Thank you.